Welcome back, better investors, to another episode here on the BI Academy channel. And so we're going to jump straight into it. The Fed is holding rates steady, all right? But we do know that they said that they're going to be doing probably 3 rate cuts coming inside of 2024. And now, of course, we are inside of 2024. So what happens with rate cuts and what are interest rates in general when we're talking about the Fed? So it's not like interest rates that we see, at our conventional bank or on a credit card or something like that. These are the rates inside of the bond market. So the Fed issues debt and they have rates that they pay interest on this debt, and they want to keep those rates low so that when they pay back the national debt, they can be able to service that debt without actually paying the full debt. All right, so it becomes more and more expensive to pay that debt the higher the rates are. So they want to keep those rates particularly low. Normally when the rates go up, the market starts to go down, and when the rates go down, the market starts to go up. Here's the catch-22, so to speak, is that when the rates go down, the market actually goes down as well. It just takes time because it's a lagging effect. So what happens is individuals know that cheap money, right? The interest rates are low. A lot of people want to go out and get houses, get cars, finance their new lifestyles. And of course, that's going to free up a lot of capital to go inside of these markets, whether it's the stock market, the cryptocurrency market, precious metals like gold and silver, so on and so forth. Money will flood into the market. Now, it's important for us to understand and keep in mind as better investors that a Fed cut in terms of the rate is only a temporary solution to make the markets go up. Historically, what we see is that Fed rate cuts actually serve as a signal that the U.S. economy is going into some kind of a recession or a depression. Nevertheless, it's going to be some kind of economic downturn, in which case the markets are going to come back down. Why? Because when everybody has cheap money and they're out buying stuff, the prices of assets are rising dramatically. And the only way for that to come back down is for individuals to stop buying. Okay, so there's going to come a time where people say, hey, I only want to pay so much for a house, I only want to pay so much for a car, and so on and so forth. When we see that, we know that the prices have to come back down because nobody else wants to buy it at that high of a price. What are we seeing for the market? So let's look at cryptocurrency in particular. We see here Bitcoin, Ethereum, XRP, which are the top 3 cryptocurrencies inside of the crypto market. All of those are down. We saw that before the beginning of 2024, the cryptocurrency market was soaring and it was going up, especially in terms of Bitcoin. That Bitcoin dominance was really high. The altcoins started taking off as well, but not as much. So what can we expect? We can probably see some further upside, but don't be surprised if we continue to see further downside in the meantime. With these Fed rate cuts coming, more likely it's either we're going to see a market uptick to start the year and then we'll see a market sell-off to end the year, or it will be vice versa. So we have to pay attention to what the big boys are doing. In this scenario, Cathie Woods is not a boy. She is a woman, right? So Cathie Woods is the founder of ARK Investments, and she sells 33 million of Coinbase shares, and she also sells another 5.9 million of Grayscale Bitcoin Trust. So what are we seeing? We're seeing that the smart money, right? The whales, they're getting out as the price is going up, yet they're also coming out with very bullish news and getting people excited and pumping the market up. Keep in mind, we don't have an ETF at all when it comes to crypto, but so many people are getting excited. What we have to ask ourselves is, has the crypto market already priced in the fact that we know an ETF is coming? Could it already be priced into the chart, and therefore instead of us seeing some bullish momentum when the ETF comes out, instead we see downward price action? Okay, so it could actually be a sell-off, and it could be the end of that bull run. It could be showing us the local top before we go down and we start to search for lower lows. What you really have to pay attention to, especially be a better investor, is understanding that the market is made up of buyers and sellers. So therefore, especially when we're talking about whales and people that really have a lot of money inside the market, there's not going to be advice that points you in the right direction to profit the same way they will. They need somebody to buy it at a higher price than when they bought it. And if you're looking at somebody like ARK Investments, MicroStrategy with Michael Saylor, and Grayscale, BlackRock, all of these behemoths that's inside inside the market, they got in at very, very low prices. And if they didn't, they want to crash the market to where they can buy it at low prices and then sell it to you at a higher price. So we have to do the opposite of what they say, and we have to watch what they do and mimic that. We're seeing here that Grayscale is talking with JP Morgan Chase, which is a bank, of course, and Goldman Sachs, which is another big bank inside of America. And they're talking about what is their role inside the Bitcoin ETF. Well, that means that they're going to actually be investing indirectly into Bitcoin. So they themselves won't actually own the Bitcoin, but they will be custodians of that Bitcoin for their customers who put money inside of these banks, and they invest with JP Morgan and so on and so forth. So what's important to understand here is that they're saying one thing but doing something else. Multiple times we've seen very, very big players in the markets come out and say, oh, crypto's bad and so on and so forth, yet they are buying it behind the scenes. To end today's video, we're going to take a look at Jamie Dimon while he gives his confession on the Hill. And of course, Jamie Dimon, if you don't know, is the head of JP Morgan and Chase. He's going to be talking about cryptocurrency and what he thinks about it with Elizabeth Warren, who, if you don't know, she really does not like crypto and she isn't a part of Congress. Okay, so what we're going to do is take a look and listen to what he says versus what they are doing. Better investments equals a better future, and I'll see you guys in the next video.
Today's terrorists have a new way to get around the Bank Secrecy Act: cryptocurrency. Last year, an estimated $20 billion in illicit crypto transactions funded every kind of dangerous criminal. North Korea has funded at least half its missile program, including nuclear weapons, using the proceeds of crypto crime. And Israeli officials have confirmed that Hamas received millions of dollars through crypto transactions, including, quote, large sums from Iran. Mr. Dimon, you've been CEO of JP Morgan for almost 2 decades. Can you explain why crypto is such an attractive financial tool for terrorists, drug traffickers, and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have been built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
I stayed out and grind for real. From a panoramic to a drop top, I still haven't signed a deal. I've been through terrible things, I guess still trying to heal. I dreamed the struggle was over, but dream never made it real.